Welcome to Oraculum Accounting, Ethics and Governance. Ethics and governance ensure trust, accountability, and responsible decision-making in professional fields like accounting, finance, and public administration. Ethical principles guide individual conduct, while governance provides structures for transparency, control, and oversight. Meaning and importance of ethics in professional practice. Ethics refers to principles guiding behaviour toward honesty, fairness, responsibility, and respect for stakeholders. It builds trust, protects organisational reputation, and ensures decisions serve legitimate interests rather than personal gain. Without ethics, technical expertise alone cannot ensure responsible outcomes. Ethical principles in accounting, auditing, finance, and taxation. Core ethical principles include integrity in reporting and communication, objectivity in analysis and decision-making, professional competence and due care, confidentiality of sensitive information, professional behaviour that upholds public trust. These principles ensure financial information is reliable and decisions remain impartial. Professional codes of conduct and regulatory expectations. Professional bodies and regulators issue codes defining acceptable conduct, independence requirements, disclosure obligations, and disciplinary procedures. Compliance ensures consistency, protects stakeholders, and strengthens public confidence in professional services. Governance structures and organizational oversight. Governance refers to systems through which organizations are directed and controlled. Boards set strategic direction and ensure accountability. Committees such as audit or risk committees provide oversight. Management implements policies and operational controls. Effective governance balances authority with responsibility and aligns decisions with organizational and stakeholder interests. Internal controls, accountability, and transparency mechanisms. Internal controls such as authorization procedures, segregation of duties, documentation, and monitoring systems prevent misuse of resources and ensure accurate reporting. Transparency through reporting and disclosure allows stakeholders to evaluate performance and hold decision-makers accountable. Conflict of interest, independence, and professional judgment. Professionals must avoid conflicts of interest, where personal interests may influence decisions. Maintaining independence ensures objectivity, especially in auditing and financial oversight roles. Professional judgment requires balancing rules, evidence, and ethical responsibility, not just technical compliance. Ethical decision-making in management and public administration. Managers and public officials often face complex decisions involving competing interests and limited resources. Ethical decision-making requires evaluating legality, fairness, public impact, and long-term consequences, focusing on organizational and societal benefit. Whistleblowing, compliance systems, and organizational culture. Ethical organizations establish safe reporting channels, compliance systems, and ethics committees. These help detect irregularities early. A strong ethical culture reduces risks of fraud, corruption, and manipulation. Consequences of ethical failure and governance breakdowns. Failure in ethics and governance leads to financial loss, legal penalties, reputational damage, and loss of public confidence. Such failures impact organizations, investors, employees, and society. Key professional ethics principles. Explanation with example. 1. Integrity. Integrity means being honest, truthful, and straightforward, ensuring accurate reporting without manipulation. Example: correcting overstated revenue despite reducing profit and informing management. 2. Objectivity. Objectivity requires decisions based on evidence without bias, pressure, or personal interest. Example: comparing suppliers objectively instead of favoring a friend's business. 3. Professional competence and due care. Requires maintaining updated knowledge, applying skills carefully, and following current standards. Example: reviewing updated tax laws before preparing returns. 4. Confidentiality. Involves protecting sensitive information and not disclosing it without proper authority. Example: not sharing employee salary details with others. 5. Professional behaviour. Requires compliance with laws and maintaining public trust in the profession. Example: refusing to approve incomplete financial statements without proper documentation. Conclusion: ethics ensures responsible conduct, and governance ensures proper control and oversight. Together, they build trust, improve decisions, and support sustainable organizational performance. Thank you for watching. Subscribe for more informative content.